Good evening, ladies and gentlemen. It is my privilege to welcome you to this earnings call of Sanathan Textiles Limited for the second quarter of FY24-25. I am Jude D'Souza, the Company Secretary and Compliance Officer, entrusted with overseeing investor relations. I will be your moderator for today's session as we delve into the business and financial performance of the company. Please note, all the participants will have their video disabled and audio on mute during the call. The participants asking questions will only be requested to have his or her audio unmuted. Post the management commentary, the company will open for a Q&A session. Interested participants may click on raise hand icon at the center bottom of the pane on WebEx application to join the Q&A. The participants may click this option during the management commentary itself to ensure they find a place in the queue. Upon announcement of their name, the participant will be requested to unmute by the host. The participant must unmute by clicking on the Unmute Me button. Post this, the participant can ask the question. Before we proceed, I would like to bring to your attention that certain statements made during this discussion may constitute forward-looking statements. These statements are based on our current expectation, assumption, and beliefs regarding future developments, and are inherently subject to various risks, uncertainties, and factors beyond our control. Such forward-looking statements involve both known and unknown risk, and we advise you to interpret them with caution. Now it is my honor to introduce the esteemed members of our management team who are present with us today. We have Mr. Paresh Dattani, the Chairman and the Managing Director. We have Mr. Sameer Dattani, the Director, and Mr. Sanjay Shah, the Chief Financial Officer. Kindly note that this conference is being recorded, and the recording will be made available on our website, accompanied by a full transcript for future reference. Without further ado, I now invite Mr. Paresh Dattani, our Chairman and Managing Director, to share his insights and address the esteemed participants.
Hi, good evening, everyone, and thank you for joining us today. It's my pleasure to welcome all our stakeholders, analysts, and investors to our maiden conference call. Today, we will walk you through the remarkable journey of Sanathan Textiles Limited, provide an overview of our business, and share insights into the visions of our future. The company was incorporated in 2005, marking the beginning of our journey in the textile industry. We took over the business of manufacturing from Sanathan Textiles with a vision to become a lead player in the textile industry. Today, we stand among the few companies in India with a presence across the polyester, cotton, and technical textile segments, enabling us to serve a diverse range of industries and customer needs. Through our state-of-the-art fully integrated yarn manufacturing facility in Silvassa, having a total installed manufacturing capacity of 223,750 metric tons per annum. We manufacture a huge variety of yarn products catering to a broad spectrum of applications. The expertise of our promoters, who bring over 3 decades of experience in the industry, has been instrumental in driving our strategic vision and operational excellence. From humble beginnings, we have achieved significant milestones, starting with a capacity of 1,500 metric tons of cotton yarn and about 13,500 metric tons of polyester filament yarns. We have grown exponentially, reaching 14,000 tons of cotton yarn and about 2 lakh metric tons of polyester filament yarn by 2024. In parallel, we expanded our product portfolio with value-added products catering to industrial and technical textiles, scaling capacity from 5,400 tons to 9,000 metric tons per annum. Our success is further reflected in the long-standing relationships we have built with some of India's top consumer brands, as Welspun India, Page Industries, D-Deco Home Fabrics, Wildcraft India, and SRF Limited, etc. Supported by an extensive network of over 20,000 customers and 900 distributors spanning India and 26 export destinations, we have earned the prestigious designation of a 3-star export house. Sustainability is at the heart of our operations. We are committed to eco-friendly practices, efficient resource utilization, and waste reduction, ensuring alignment with global environmental standards. Through continuous investment in research and development, we innovate to deliver yarns that meet customer needs with unique colors, properties, and characteristics. As we look forward, we are poised for an exciting future. We are today in the advanced stages of commissioning our new polyester filament yarn manufacturing facility in Wazirabad, Punjab, under our wholly owned subsidiary, Sanathan Polycot Private Limited. This facility is set to increase our total manufacturing capacity from 550 tons a day to 1,500 tons per day. The construction for the said project commenced in 2023, and the first phase is expected to be operational in the first quarter 2025-26. At our Silvassa facility, we have recently commenced cotton yarn operations at Unit 3 with an installed capacity of 540 metric tons per annum. By FY26, we plan to begin operations at Unit 4, which will further add an additional 10,900 metric tons per annum. Thank you very much, and I now ask Sameer to run you through the business and operations of the company. Thank you.
Thank you, Paresh Uncle, and good evening to everyone. Thank you for being here. I will first go through the business and industry overview and then talk about the current business at Sanathan Textiles. India's textile industry is one of the largest in the world, contributing to 2.3% of the country's GDP and about 12% to our exports. India is the second largest producer of textiles, and this sector is projected to grow at a 10% CAGR over the next decade. All this is being aided by government incentives such as the PLI scheme, which focuses on boosting man-made fibers and technical textiles. Additionally, we have the PM Mitra Park scheme, which is providing investment in infrastructure for mega textile hubs for global competitiveness. India's textile market is experiencing strong demand growth driven by domestic consumption, exports, and global situations. The global apparel market is set to grow at a CAGR of 8%, while India's textile market is projected to grow at a CAGR of 8.8% in the coming years. The technical textile segment is a key growth driver in the coming years, expected to expand rapidly, supported by rising awareness, higher disposable incomes, new end-use and applications for textiles. Additionally, all this will require new and additional man-made fibers and yarns, along with, of course, cotton yarns and blended yarns. The government has a keen focus on exports of textiles, modernization of facilities, sustainability in terms of operations, and making sure that India becomes a key global hub for textile in the coming years. Talking about Sanathan, our business at Sanathan Textiles is divided into 3 separate yarn business verticals, consisting of polyester filament yarns, cotton yarns, and yarns for technical textile and industrial applications. Our polyester yarn manufacturing capacity is about 2 lakh tons per annum. We have a fully integrated polyester division where we process petrochemicals as our input to produce a large, diverse range of polyester filament yarns. Our polymerization setup, featuring 3 lusters, enables flexibility to meet diverse customer and different industry and segment requirements. We focus and specialize in bond-dyed colored yarns, functional yarns, performance yarns, made-to-order customized yarns, and other value-added yarn products. This polyester division offers a wide range of products across different polyester filament yarns, such as POY, partially oriented yarn, FDY, fully drawn yarn, DTY, draw textured yarn, air textured yarn, and twisted yarns. A range of cotton yarns are used for making of apparel, suiting, shirting, bed sheets, home textile, and other end-user application. We have a strong focus on fine count compact yarns, and we ensure superior quality and performance. By sourcing premium raw cotton from India, we meticulously spin our yarn to perfection. Our division for yarn for technical textiles is a specialized segment with diverse and interesting applications ranging from construction, agriculture, sportswear, safety, and other applications such as. The growing adoption of technical textiles is rapidly increasing in India, and these kind of technical textile yarns and products made from these yarns are being used in health and safety industries, are being used to make construction cost effective, used for its durable properties and lightweight properties. A little bit about our manufacturing facility. Our current facility is a fully integrated yarn facility in Silvassa, strategically located. It has an installed capacity of 223,000 tons across all three yarn verticals. Our new capacity is expected to commission in Punjab, as Paresh Bhai mentioned, in the coming financial year, where we'll be more than doubling our polyester yarn manufacturing capacity. While we manufacture products across all three segments, polyester remains our primary focus and the key contributor to our revenue. Now I'd like to hand over the call to Mr. Sanjay Shah, our CFO, who will take you over the financial performance of the company.
Thank you, Shamir. For the quarter ended September 30th, 2024, our revenue from operations stood at rupees 742.17 crores as against rupees 745.61 crores in Q2 FY24 on account of marginal declines in sales volume by 1.92%. EBITDA for the quarter is rupees 58.22 crores as against rupees 51.84 crores in Q2 FY24 on account of relatively better gross margins. PAT stood at rupees 32.56 crores against PAT of 30.24 crore in Q2 FY24. For the half year ended September 30th, 2024, our revenues from operations stood at rupees 1523.30 crores as against rupees 1420.96 crores in H1 FY24, led by a higher sales volume of 6.77%. EBITDA for H1 25 stood at rupees 136.70 crores as against rupees 84.670 crores in H1 FY24 on account of higher volumes, better margins as well as lower operating expenses. H1 FY25 PAT stood at rupees 82.63 crores against PAT of rupees 47.34 crores in H1 FY24. Thank you all. We can now take questions.
Yeah. Thank you for the management commentary. The first question is from Harsh Mittal from ICICI Securities. Mr. Harsh, you can unmute yourself and ask your question. Thank you.
Hi, am I audible now?
Yes, you are.
Yes, you are.
Good evening, sir. Thank you for this opportunity. I have few questions. The first question is, how is the realization panned out in Q2 versus Q1 FY25? on the POY realization levels?
Good evening, Harsh.
Yes,
The Q2, I would give you the overall number on Q2 FY25 compared to Q1 FY25, if that's your requirement. Is that correct? Do I understand you correctly?
yes, sir. Yes, sir.
Yeah. So I think 1 second. Sanjay Bhai will give you the numbers and then I will discuss that with you.
Yeah. See, the polyester realization were slightly down in the current quarter as compared to the previous quarter. It got reduced by approximately 1 odd rupee.
Okay, okay. So, sir, do we see any further dip in the realization in the current in the quarter three, which just recently ended?
No, see, quarter two, our revenue was more or less similar, but the EBITDA numbers were slightly lower because of volatility in the raw material pricing. But having said that, we need to focus on an annualized basis because, Harsh, as you must have seen in the past also, that quarter to quarter we do have drops of up to 1 to 2% on margins, but we must look at it on an annualized basis. And this year, FY25, we aim to end the year at a top line of about 3,000 to 3,100 crores with an EBITDA margin of about 9%.
Sure, sir. Sure. My second question is, sir, what is the cumulative capex which we have done for the Wazirabad Chandigarh plant till date?
As on December 31st, we have done a capex of 1,450 crores already. And out of that, we have drawn about close to 1,000 crores from our debt and balances from our contribution on that.
Okay. So my final question is that the employee expenses have increased by 9% sequentially in Q2. So is it safe to assume the same run rate for the Silvassa unit going ahead? That is 26 crores?
Yes.
Okay, okay. Thank you. Thank you. These were my questions. Thank you.
Thank you, Harsh. The next line of question is from Mr. Garvita Jain from Seven Islands PMS.
Hello.
Yeah, hi, Garvita.
Hi, sir. So I have a few questions. First of all, sir, if you could please give me some guidance on by when we can, by exactly which quarter, we can expect the commissioning of or the operations of the Punjab plant which we have.
Garvita, we aim at the moment as we stand now, and we aim to commission this in the first quarter of the financial year 2026. And we will start sometime end April, beginning May, and we will be fully stabilized by the end of the quarter.
Okay. And sir, at what capacity we will be starting at with? What would be the capacity utilization we are expecting with the beginning of the operations?
Yeah, see, we have our entire capacity is mapped to about 900 and on tons at the peak levels. We are doing that in two phases. In the first phase, we are doing about 700 tons per day. And the second phase will be adding another 250 tons a day. So we are at the moment talking about the first phase of operations. Out of the 700 tons, we will be starting with a capacity of about 400 and odd tons initially. And by the end of the quarter, we would have ramped up to the entire 700 tons per day.
Okay. And sir, also if you could give me some guidance on the prices of the raw material and the prices of the actual product, synthetic yarn and the cotton yarn also. I just need guidance on the price.
See, as we stand now, currently, let me tell you segment-wise, cotton yarns, our cotton today, what we're buying is close to about 54,000 rupees a candy, which is about 355 kilos. So we, including our deduction for the waste, etc., we get a clean cotton of about 178 to 180 rupees. We have an average realization of about 320 odd rupees as on today.
320 is the average
Yes.
realization.
Our average count rate is about 57. On the filament yarn side, we are our raw material cost today, the entire PTA MEG mix with the additives comes to about 73 rupees and some paisa. And we are doing an average run rate of about 39 rupees value addition. That's about 112, 113 rupees.
That's for
This is
PTA.
without the GST.
That's PTA, right?
Yeah, the PTA MEG cost is about 73 rupees 50 paisa.
Okay. Okay, sir. And sir, also if you could give me the guidance on the actual current market prices for cotton yarn and synthetic yarn.
Can you please repeat that? I lost you.
Sir, I'm asking if you could give me guidance on the current market price for cotton yarn and synthetic yarn.
Yeah, so the current market price of cotton yarn on our count range, averagely what we produce 57 count, we are doing about 320 odd rupees.
Okay,
And
yes,
on
correct.
the filament yarn side, we are doing an average of about 113 rupees.
113 rupees.
Yes.
And sir, since like currently synthetic yarn is cost lower than the cotton yarn, so I wanted to understand the price parity between the two. So by what price of synthetic yarn can we expect people to switch from synthetic to cotton yarn? Am I clear? Can you make some sense out of this?
To be very honest to you, I mean, there is a lot of variations that would go on to that, but on a thumb rule basis, 150 denier on a filament yarn would equal to about 30s on the cotton yarn side. So the 30s price is today in the range of about 250, 60 rupees, whereas the filament yarn is say about 110, 12 rupees, 108 to 5 to 10 rupees. That's the differential. Having said that, I would just like to point out my experience on this, that though we talk about fiber shift, it really doesn't move more than 5% across the board. I have never seen that happen.
Okay, so more at max we can expect 5% movement, right?
That's right. That's right.
Okay. And sir, could you tell me, do you do we have excess capacity of synthetic yarn manufacturers in India at the moment, or what's the case with that?
As we stand now, the industry is operating at an operating rate of about 83, 84%, which is in actual sense almost peak operating rates, because when we talk about the 100%, we are talking about setup facilities. Some of them are defunct today, not in a position to operate. So when we operate at about 83, 84%, we are relatively close to 100% operations.
Okay.
Peak operations.
Okay, got it. And sir, if I talk about in terms of manufacturing of the two type of yarns, which one is more cost effective?
No, what can I please ask you what you mean by cost effective?
I'm asking so that out of the cotton yarn and synthetic yarn, the manufacturing process of which of the two is more cost effective, as in which one has more margin contribution?
I would, like to answer you this on a thing, because we have been doing this for a lot many years, and across years we have seen the purpose of Sanathan getting into three verticals is just to mitigate this, because there have been times when cotton has paid better, there have been times when filament yarn has paid better, but just to average that out, we have ventured into the three segments. But having said that, I would just like to point out that over the years, we have seen, if you look at an average 3 to 5 years, our experience says that cotton yarn has given us an EBITDA close to about 19 to 20%, and filament yarn gives us between 9 to 10%. But cotton yarn has an asset turn of 1, and the filament yarn has an asset turn of about 2.1 to 2.2.
Okay, got it. I have one more question, sir. I wanted to understand this thing that when I was going through the prospectus which you have submitted, it says that most of the raw material which we source from, they are located on the western region of the country. But we are setting up our plant in Punjab location. So will that involve additional cost for the acquisition of the raw material or the transportation cost?
You're very right. Most of our raw material of PTMEG is all located on the western side of the country. But to give you a different perspective to this, we as a country today are producing almost 4.2 million tons of filament yarn, which is all also produced on the western part of the country. And about 1 million is consumed in the northern markets. There are 5 principal markets up in the north, which is Ludhiana, Amritsar, Panipat, Delhi, and NCR.
Okay.
So almost 1 million tons out of this 4.2 billion tons is consumed in the north. And there is no supplier there. Everything goes from the western side of the country to the north.
Okay.
And barring this, as far as our raw material is concerned, we have a source in the north at Panipat, where PTMEG is available from one of the manufacturers.
Okay, so
So we will source our raw material from the Panipat refinery, and we will be selling our finished goods also in the north in the same ecosystem. This entire system is within a radius of 150 kilometers.
150 kilometers. So, like the production which we will be doing from that unit will serve the market in north only.
Yes, because
there won't be much movement, right?
Yes, no, there will be no movement to any other market. The simple reason that what we are setting up there is hardly 25 to 30% of the market which is already consuming there. I am not factoring any growth in that. We are just setting up 25% of what is already consumed there.
Okay. Okay. And so could you give me guidance on what is the expected sales growth we can expect in the coming year for us?
Yes. For FY26, we aim to achieve a top line of between 5,200 to 5,500.
FY26 top line.
FY26. Because of the new
5,200.
plant, we will not get a full impact of that because it'll take us 1 quarter to ramp up everything. So we will get about the company top line will be between 5,200 to 5,500 crores.
Okay. And with the EBITDA margin of?
We are aiming to achieve an EBITDA margin of between 10 to 11%.
10 to 11%. Okay. And sir, do you have the sales to COGS ratio with you for this? Okay, I can do it later. That's fine. And one last question, sir. If there are any price fluctuation in the raw material cost, are we able to manage to pass on the pricing pressure to the customers or to the final product users?
Yes, we always aim to pass on either way, if it goes up or down, to pass it on to the customer. Of course, there are times where there are certain lag times are there. Maybe, you might have a lag of 15 days to a month between the passing on either way.
Okay, 15 to 20 days lag.
Yeah.
And sir, are we going to maintain the inventory as high as they are currently?
No, inventory of the raw materials or?
Yes, of the raw materials.
The inventory of the raw materials currently may look a little bit high. It is not. It is as per the industry norms and standards. But having said that, we are also today importing about 50% of our raw material,
Right.
which the transit time is about 30 days, 25 to 30 days. So the inventory level looks higher, but going forward, we are in the country having 2 PTA plants being commissioned in the calendar year 25. One is the GAIL plant at Mangalore, one is the Indian Oil plant at Paradeep. With these 2 plants, each with a capacity of 1.2 million tons, we will be adding about 2.4 million tons of PTA in the country. Today, as we stand, we import as a country about 1.6 to 1.7 million tons. So we will be excess in PTA. And for us, as far as the Punjab facility goes, we are not going to maintain any extra raw material because our raw material will be coming from a local source.
Okay.
Thank you, sir, for that. Ms. Garvita,
Sure,
since we
I
have a
can.
long queue,
Yeah, that's right.
thank you so much. Thank you, Garvita. Sir, the next question is from Mr. Ashutosh Nimani from JM Financial.
Yeah, am I audible?
Yes, Asutosh.
Yes,
Good
sir.
evening.
Yeah, good evening. Thanks for the opportunity, sir. So my first question was regarding the capex. So polyester plant, you mentioned 1450 crores capex we have already done, right?
That's right.
Yeah. So what would be the potential like capex, the entire capex that we will be requiring for the polyester plant?
Yeah, we have planned the project. We aim to complete this in about 1800 odd crores for the entire capex on the first phase. Now, I would also like to inform you one thing, that we are setting up we have got the land, the infrastructure, the building, the power, the polymerization, the automation, the warehousing, everything for the peak capacity of 950 tons. But we are at the first level setting up 700 tons, and we will be adding in the second phase 250 tons, where the asset turn will be very high because everything else is already set up.
Yeah, understood. So this 1800 crores constitutes both phase 1 and phase 2?
No, that is only phase 1. Phase 2, we will have to add another 250 crores.
Okay, understood. And what would be the capex for the cotton yarn expansion plant?
The cotton yarn expansion will be about close to 400 crores.
Across both the units, phases?
That's right.
Okay. And how much have we incurred anything as of now?
No, nothing substantial. We paid some advances for some equipment, but nothing substantial.
Yeah, understood. Sir, and my second question is regarding the margin guidance you gave. So we are effectively doubling the polyester.
More than doubling the polyester capacity.
But polyester margins are 9 to 10%, like literally half of the cotton yarn. So will it?
Yes, but the asset turn, Ashutosh, is more than double also.
Okay, so we expect the margins to impact. And third question is, sir, regarding the technical textile segment. In your initial overview, you were very positive about this segment, technical textile growing, but there is no capacity expansion plan for us. So what are our plans for this technical textile?
Yeah, we have already moved ahead, and we have already booked some equipment. We are doubling our technical textile capacity also, which today currently stands at 9,000 metric tons per annum. We'll be setting up another 9,000 metric tons per annum in Punjab.
Okay, by when will it be set up?
I beg your pardon?
Sorry, I didn't get
that.
Yeah,
I lost you, sorry.
By when will that additional capacity come up?
Yeah, that additional capacity will come up in the last quarter, 2025.
So we will be doubling that.
2025 last quarter.
2025 last quarter. Okay, understood. So the capacity in FY25 for textile would move from 9,000 to 18,000. Is that correct?
Yes, it will move from 9,000 to 18,000 metric tons per annum.
Okay. And then what would be the capex for it and asset turns, if you could just tell?
We have already booked the equipment under the current capex also. Only the balanced work will be done, which will not be a very substantial portion of it.
Okay, understood. Sir, and last question. Could you just tell the EBITDA mix of, like, in this quarter we did around 60 odd crores of EBITDA. How?
Yeah. So as I said, I was just answering the lady earlier that we will end the year in a top line of about 3,000 to 3,100 crores, and we will aim to do an EBITDA of 9 plus on that 3,100.
My question was not that. Like, out of the 60 crores of EBITDA, the breakup, what percentage of the total EBITDA would be contributed by polyester, cotton, and textile?
We have a lot of common facilities and a common usage, so it would be very difficult to really break that up. That's why I answered in that way, that normally we do about 9 to 10%, or about on the filament yarn side, about 18 to 20% on the cotton yarn side, and about 13 to 15% on the yarns for technical textiles.
Okay.
So that gives us an average EBITDA, which we aim for the next year to do about 10 to 11% at a company level on top line of 5,200 to 5,500.
Yeah. And sir, could you provide like advanced textile growth rate that you are seeing on the ground, like based on your interaction for next 2 to 3 years, maybe?
Well, the
Revenue.
so-called pundits and the agencies are projecting about 6% to 8% growth over the coming years on that.
Okay, because we earlier have grown this segment by 10%, I think.
Yeah, it's the entire textile segment, yes.
Okay. So, no, what I mean is the industrial and textile segment for the Sanathan Textile revenue growth has been 11% and 19% for the last 2 years.
You're talking about the yarns for technical textiles?
Yeah, yarn for technical textiles.
Yarn for technical textiles, what the agencies have reported, they're expecting to grow at a CAGR of about 13 to 15%.
And we expect to grow by that rate or any?
Yeah, so that's why we are doubling our capacity, and plus we want to serve our northern-based customers from the Punjab facility there also.
Okay, understood. And any impact of imports from polyester yarn pricing pressure, anything that you are?
No substantial imports are there on the filament yarn side from anywhere in the.
Yeah, understood, sir. Thanks a lot.
Thank you.
Thank you, Ashutosh. The next line of question is from Saransh Gupta from Swan Investments. Mr. Saransh Gupta. Okay, we move to the next participant. The next question is from Mr. Devang Doshi.
Hello. Sir, good evening. Yeah, hi, good evening. Am I audible?
Yeah, you're audible, Devang.
Yes, you're audible, sir.
Oh, sir, as you said, 50% of our raw material has been imported. I mean, we have been importing it. So from which country are we importing, and will the tariff war will affect our working?
So far, whatever we have been importing on the PTA front has been from countries like Taiwan, Korea, and Thailand. And there is no tariff war as far as these countries are concerned. But as I said earlier, going forward, our imports will be down to a minuscule level on the PTA because of the 2 plants that are commissioning in the country in the final calendar year 25. And also for our Punjab facility, we will be sourcing from the local Panipat supplier.
Okay, sir. Thank you so much.
Yeah.
The next question is from Mr. Rahil Shah from Crown Capital.
Hello.
Hi, Rahil. Good evening.
Yes, hi, sir. Good evening. So firstly, you mentioned, your aim and your targets for FY25 and FY26. So to just, revisit that point, the FY25 guidance or outlook suggests a very meager growth of 5% or so, right? And it's a substantial jump in FY26. So what will drive this? And why was this year on a very, you can say a very
Yeah, Rahul, I will explain this to you. This, when you see FY25, the top line of 3,000 to 3,100, there's a meager growth because we have not really added any capacity this year. What we are adding is going forward. So next year, when we commission this facility at Punjab, in the first quarter, we will, as I said earlier, we will start with a capacity of about 400 odd tons a day and ramp it up to 700 tons in the first phase. So this will give us the additional capacity, and we will have a top line. We aim to have a top line of about 5,200 to 5,500 crores FY26. At the moment, our capacity, what we have, we are fully sweating and utilizing the asset.
Okay, so when this entire capacity comes on board, the new one, the Punjab facility, so when you start with 400 tons a day, that will translate into the revenue targets you've mentioned, or it's at peak capacity?
No, the peak capacity will be different because first year we will just about get about 70 to 75% of the capacity because we will be ramping up from April to June. So we'll expect to get about 70 to 75%. That's why I said 5,200 to 5,500. Having said that, at peak capacity, when we finish the first phase of our expansion, we will be at about 6,200 crore on a company level top line. When we finish the second phase of the expansion, we will be at 7,700 crore top line. I hope I'm clear to you, Rahul. Rahul?
Mr. Rahil?
Rahil, am
Hello,
I clear?
am I audible?
Yeah.
Yes.
Did you hear me out?
Yes. I was already speaking. I think my mic was not functioning.
All right. Sorry, we couldn't hear you. Go
Yeah,
ahead.
no problem. So I'm speaking on the margins now, which you expect to go back to, the double-digit levels starting from next financial year.
That's
So
right.
again, yeah. So I think in financial year 22, you did 17% or so. So was the pricing a lot in our favor back then, and what are expectations going forward?
Can you just repeat that because I lost you for a moment?
Back in FY22, when you
Uh-huh.
did like 17% or so, I believe, right?
That's
EBITDA
right.
margins, yeah.
That's right.
So back then, was the raw material pricing a lot in our favor, and what has changed now, and how will it be going forward?
I would like to point out here that FY22 we did 17 odd percent EBITDA margins. You're very right on that. That was the effect of the post-COVID pent-up demand which was there, which most industries also experienced like us. We never look at that as the realistic margin that we aim and actually can deliver. Post that, the margin. So if you look at 21, 22, we did 16 and 17%. And then 23 and 24, when the wars broke out and the geopolitical situation across the globe got bad, we dropped down to about close to 7 point some percent to 8%. So that's why we always say we always look at ourselves on a 3-year, 5-year, 7-year basis. We averagely, if you look back, we have done about 10.5 to 11% over a 3, 5, and 7-year period.
So those are the steady state margins one can expect in your business.
Yeah, of course, with the Punjab coming in, there will be an additional impact of margins further because of certain factors of like we are closer to the market, closer to the raw materials. We have some manufacturing advantages also up there. So that will further add to our EBITDA margins going forward.
Right. Okay. And lastly, you in the opening remarks you had mentioned that the sector is projected to grow at 10% CAGR, correct, for the next decade or so. Now, that's the Indian textile sector or the global?
The Indian textile sector overall, the textile sector is expected to, as per the agencies, as per the rating agencies, expected to grow at about 10% over the next couple of years.
Right. So, putting aside the FY26 jump because of the new capacity, from there on, you can easily beat this industry CAGR in terms of top line growth.
I didn't follow that question. Can you please come again, Rahil?
So, going forward after FY26, right, when all your capacities are in place, do you think you can easily beat this industry 10% CAGR from there on?
Oh, yes. There's no doubt on that.
There's no doubt on that. Okay, perfect. So thank you so much and all the best to you.
Thank you. Thank you, Rahil.
Thank you, Rahil. The next question, sir, is from Mr. Saransh Gupta. He wants to understand uh, what gives us the confidence of 9% EBITDA for FY25 on a top line of 3,000. And as of half year of 25, we have achieved an EBITDA of 134 crores. Does this mean there is an upside in the realization? Or what can be the reason for the 9% EBITDA?
The reason for that is that we have, as I mentioned, that Q2, there was volatility in the raw material, which has now stabilized and moving up. So we have already, the margin spreads have improved, and we expect them to be normally like we did in the first quarter also, which was north of 9%. So we will definitely end up at 9% EBITDA on a top line of 3,100 crores.
Sure, sir. The next line of question is from Mr. Surid from Paladin Capital. I am unmuting you, sir.
Hi, can you hear me?
Yes.
Yeah, we can hear you.
Hi.
Good evening.
Good evening. My first question is, what is the approximate split of sales today?
Among the three segments,
Yes.
as we stand today on this top line of 3,100 crores, we will have about 77% of our revenue coming in from the filament yarn business, about 18% revenue coming in from the cotton yarn business, and about 5% coming in for the yarns for technical textiles.
Okay. So about 2,500 crores is coming from the polyester yarn business. Out of this 2,500 crores, how much would currently be going to the North market?
On a daily basis, what we are adding 700 tons per day over there in the first phase. We are today selling at about 3%, which is about 150 tons a day. 30%, sorry.
So you are currently selling 30%
of our current production, we are selling to the North market.
So out of 2,500, about 800 odd crores is going.
800 and odd crores is coming from the North market.
So
but I would just like to point out here that what I mentioned earlier, that it's already a 1 million ton consuming market per year, and what we are setting up in Punjab is just 25% of that. What is already being consumed without factoring in any growth on that.
Yes, sure. So just a few adjacent questions. If this 30% were to go from the North market, would it be easy for your Daman or the Silvassa plant to replace that by selling that 30% to other parts of the country?
Yes, we already have a plan made for that. That 150 tons a day, we always have, because what we are setting up is only 25% of what is already consumed there. The balance will still be going from Silvassa. So if it is better net back, we keep supplying that. If not, we place that in the growing western and southern markets of India, or also have the options to sell that in the export market. So we will do all our exports from our Silvassa facility, being closer to the port.
And similarly, then the competitors who are currently supplying the North market, they will also feel that loss of market share. Could there be a situation where there is excess supply in the West and prices and margins therefore get compressed?
Let me make one thing clear. We are not setting up anything closer to the market or going up north with a purpose to disturb the market in any way at all. What we are trying to do, and what we have achieved, is we have created a new ecosystem with raw material there, the customers there, manufacturing there, and supply there, giving us some advantages on manufacturing costs, and giving us accessibility and also a freight advantage. Having said that, yes, there will be for a short period some replacement of material of the other peers who were selling there. But if you look at on the total 4.4 million tons of the Indian market, it's hardly about a 4%. Now that 4% is a growth that will take care of that 4% extra market share.
Okay. That's great. Thank you so much.
Yeah.
The next line of question is from Mr. Srinath Sridhar from Infinite Financial Services.
Hello.
Hi.
Yeah, can you hear me now?
Yes.
Yes.
Yeah. So my question is, how are the additional capacities going to be funded, and what is going to be the gross block in FY26 and FY27?
I will ask Sanjay Bhai to answer that for you.
Yeah. So the funding for the new project at Punjab, we have availed loans amounting to 1,320 crores.
Okay.
Okay. Total
Okay.
capex expected is 1850 crores. At
Okay.
present, the gross block is close to 1700 crores. So it will cross 3650. It will be around 3650 in FY25. And further 400 crores would be added on account of cotton project in FY27. So it will be close,
FY27.
yeah, 26, sorry.
26. Okay.
Yeah.
And so total loan would be 1300 crores.
1320. We have taken loans
1320.
amounting to 1320 for the project.
Okay, and after that, no more. So for working capital, would you be availing an additional loan?
Yes, we would be availing working capital, but the primary requirement for the facility would be LC, so non-fund based limits.
Okay, thank you, sir.
I would also, Srinath, like to
Yes.
add here
Yeah.
that out of the debt of 1300 and odd crores that we had taken for the new unit, as per our DRHP, you must have read that of the primary issue size of 400,
Right.
we are using 300 to pay off the debt. 160 crores we have already paid off for our Silvassa unit debt,
Right.
and
Right.
140 crores will be paying off once we have availed this facility there at.
Okay. So the cost of funding will be lower. At what rate would it be?
The local debt is at about 9.25%, and we have an ECB which is at about 4%, averagely about 7 point something. So
Okay.
this 140 crores, which we'll be paying back from the primary issue size,
Right.
will go to the local bankers as an
Okay.
advance over the next 3 years of payment.
Okay. Thanks a lot, sir. That.
The next question is from the line of Mr. Jigadesh Sharma.
Hello, am I audible?
Yes, Srinath, we can hear you.
Yeah, hi sir. I have two questions. The first one is, what is the capacity of cotton yarn we are adding in FY26?
Yeah, we are adding another 70 odd thousand spindles, which will give us a capacity of 10,900 metric tons per annum.
10,900 metric tons. Okay.
Yes.
And the second question is like, we are going to do 9,000 metric ton of technical textiles ka capex na. So
That's
what is
right.
the asset turnover for it, and what is the capex amount you have incurred till now for buying these machineries and everything?
You know, the machinery that we have ordered is part of the current debt, and it has been ordered, and we have spent about, Sanjay, how much on that?
450,000 euros.
4.5 lakh euros on that.
4.5 lakh euros. Okay,
Yeah.
fine. So, and my last, repaying 160 crore ka debt hai na?
We have already repaid that from the
Repaid,
primary
yeah.
issue. For the current plant, we have paid the 160 crores.
Yes. So my question is like, do you think we will be debt free next 3-4 years with the cash we are generating and everything?
Come again? I lost you.
Whether we will be a debt free company in 3-4 years?
Yeah, we'll be net debt free over the next 3-4 years if you want to. But we also are making plans to grow otherwise. So it all depends how it moves ahead.
Okay, because we always have generating a lot of cash, na? So I was
That's
thinking
right.
whether we will be
But
able
yes,
to.
principally what you said is correct.
Okay, sir. Thank you, sir. Congratulations.
Thank you very much.
There's a message from Mr. Tajinder Singh. He's asking, he wants to know the source of capex for capacity expansion, how much debt and equity dilution is expected.
Should we have already explained that on the total first phase, we are spending about 1,800 odd crores. We have taken a debt of 1,320 crores. The balance is for our internal approvals. And out of that, we have already spent about 450 to 470 crores of that.
Thank you, sir. The next line of question is from Mr. Surya.
Jude, we can't hear him.
Yeah, he has not unmuted his mic. Okay. That was all the questions from the participant side, sir.
So that's all that's there, Jude?
Yes, sir. That's it, sir.
All right. So thank you very much, everybody. Thank you for sparing time and participating in this phone call. And if you have any other questions, then anytime we are free to answer them.
Excuse me, sir. Sorry to interrupt, but I have one last question if you would allow me to.
Yeah, please go ahead. Please.
Sir, this question is on part of exports. I wanted to understand that our exports have reduced significantly, and in the year 22-23, we had major exports to Argentina, and which is not there anymore. So, what was this export for, and the reason for this call?
See, principally because we are sweating our asset fully, we are producing fully.
बैंक लिमिट आएगा नहीं, वही लिमिट रहेगा, समझ रहे ना, वो इश्यू है। हेलो, तो अभी लास्ट क्वार्टर में 3,000 तो कुछ प्रोजेक्ट कंप्लीट हुआ।
हेलो,
हमें ऑडियो 4,500 करोड़ हुआ। अभी ये जो प्रोजेक्ट अभी कंप्लीट होगा तभी नेक्स्ट क्वार्टर में वो थोड़ा एडिशनल हेलो बैंक गारंटी आएगा, वैसा सिचुएशन है।
Jude, what?
Sorry, 1 second, sir. Yes, sir, you can go on.
This is Jen. I would like to just tell you that we have been sweating our asset fully. On the export front, our exports have moved between 5% to 16%. Because we are not under pressure to sell, we move our needle of exports depending on the better netback. If our netback is better in exports, we move more percentage to exports. If we feel local is paying us better, we move it down to that. So I hope that answers your question.
Yes, sir. So we have no further questions, sir.
Hi, Jude. This is Harsh here. I have one small question, if I may.
Yeah, go ahead.
Yes,
Go ahead, please.
Yes, sir.
So one small question, sir. There was one news article recently, around 15-20 days ago, that Garden Silk Mills is going to invest with a joint venture with IOC in Odisha, Bhadrak, with a PTA and MEG plant. So, sir, are we seeing any capacity addition in the polyester yarn segment? Any intelligence there, sir? Thank you.
See, Harsh, I would like to point out one thing to you, that as I said earlier, we are at about 4.2 million tons at an industry. And with the PLI scheme for man-made, and with the government also realizing that the growth has to come from man-made to feed the entire country and the exports, over the next couple of years, we will need about 5.5 million tons of filament yarn from the country. Now, somebody will have to grow, so the growth will definitely happen. But having said that, I would also like to point out here that ours is the last plant that has been commissioned in April. that is coming through. There to put a plant of this scale, it requires a minimum of 2.5 to 3 years, and there is no announcement as on today, a formal announcement, or let's say I would say there is no groundwork that has been done so far. So if anything has to come, it will take another 3 years minimum to come, and we will require more capacity. One more thing I would also like to inform you here today, that on the filament yarn space, when you go back a couple of years, 10, 15 years back, there were about 50, 100 players. Today, this 4.2 million ton capacity, 7 people hold about 85% of the market share. That's how consolidated that industry has become. And this additional capacity will have to come from one of the 7. I hope that answers your question, Harsh.
Got it, sir. Got it. Yes. Thank you, sir.
Anything else is there, Jude?
No, that's it, sir.
Right.
Thank you, sir.
Thank you. Thank you, everybody, for participating. And pleasure that you took out time and attended our call. I thank the entire team at Sanathan for their untiring efforts and all our stakeholders for their continuous support and faith in our company. This is all from our side, and I would like to thank you very much for your time and attention. Thank you very much.